Next company to discuss, though, is Astral. So Chris Skitter has run a very solid business. It came out of the tiger business many decades ago. But it basically has two parts. The one is Meadow Feeds, which is a major producer of animal feeds for themselves and for other farmers. And then it's in the chicken business, where it's got substantial chicken batteries and manufactures and sells food into the supermarkets using various brands, whole chickens, organic chickens, chicken pieces, individually quick frozen pieces. I mean, all of it. Market cap, 5.33 billion rand. Price earnings ratio is low, 6.97, dividend yield 7.74. Trading update there looked a bit glum.
Yeah. Didn't look really happy. I mean, I think when you consider the difficult situations that we just discussed, they pretty much have both going for them, which is unfortunate. So on the one side, droughts, they've had a sort of...
Because presumably they either grow or buy in
they have
grains.
to buy in a lot lot of the components.
And then they complain that the rand price is high, of the import parity, etc.
So the rand, the drought, you know, the chicken industry. Unfortunately, it's not a very exciting
putting
situation.
Some of their chicken producing assets on sort of care and maintenance, because they're just saying, look, we can't produce all this chicken if the guys can land it from Brazil at a lower price.
It doesn't make sense.
It's like, what are we going to do?
Exactly. I mean, just back to retrenchments and all of that. There's no sense in actually running a business when it's not profitable. I mean, when you consider, just back to this is a pretty similar story, but even in Rainbow, they've been running the chicken business at a loss for the past 5 years. Yeah. So, and it's a tough environment. It's a low margin business.
And that's ultimately how capitalism works. You can't suck up losses indefinitely because your shareholders won't allow you to.
So true. So you need to either size down, you need to make it more nimble if it's possible, hope that, you know, all the other factors play in your favor, and then it can make you money.
Because you cannot really depend on the government to give you repeated tariff protection and anti-dumping protection, because at some point, you know, there are other considerations, international trade negotiations, like the AGOA thing with the Americans. Let's look at the share chart, though, because it's quite a complex picture. For a while, it looked quite good in 2014. It surged, and then it's kind of tumbling down there at the tail end of 2015, and the recent trading update, as we said, not looking so great.
So I think from the start of the year, you can see it did well, sort of, if you exclude the volatility around the price, but it has outperformed the market. I don't really know why, to be honest, but
maybe a bit oversold in that bottom point.
I think that could have been the case, but.
And there could have been some sense that maybe with lowered fuel prices, that there would be some attraction in
there were talks,
cost structure.
We know none of that really came through to us.
Nice company, solid, good dividend payer in the past, but unfortunately not.
Good management, all of that, but the business case and sort of the industry case isn't for it.
Okay, right.